Hello, hello. Today we're going to be looking at how price reacted to the levels that I marked out yesterday. Let's add the suspension block. So I said I didn't want to see it get up into here, and I wanted to see it react off this level, and if not, if it goes higher than this level, I wanted to see it react off this level. And as you can see, price just wicked right above it, and then went down a bunch. So that's exactly what I wanted to see if we were bearish. So the next week, I'm looking for this low to get taken out, this low to get taken out, and this low to get taken out. And I just wanted to mention how it just didn't get to this at all. What it did get to, was this breaker right here. The highest up close candle. So if we go down to the 4 hour, we'll see how price hit that to the tick and then trended downwards. We got consolidation. It went up, hit this range. This is when it breaks out of consolidation. This candle right here. Took out the lows. Highs couldn't be taken out. The lows can be taken out. Takes out this daily high and runs lower. And also hits what to the tick? The 75% of this line. Actually, this should be reversed. The 25% of this line. Right to the tick. And then large sell off. And then hits this fair value gap to the tick. Large sell off. Fair value gap, large sell off. And then took out these highs. And then we failed to get to these highs. And look what happened because of that. Just a massive move down. And I'd honestly be looking at, like, that's the last line in the sand. I'm looking for it to really sell off here. Let me go to the 1 hour. Same thing here. Just the resistance off this level. But people are selling here, and people are selling here. And then that's what that candle's for. And then people are selling here, because I think, well, that's all it's going to do. It didn't even close above, or it did like a tick above this. Yeah, just a tick. And you saw the sell-off. People got excited, thinking this is the trade that's going to go all the way down here. When in reality, boom, they get stopped out once more, and it hits the gap that I mentioned. And falls off crazy because of that. Punishes late sellers here, and then fall off. Another little tiny retracement, and falls off. Let's look at the 15-minute. Let's just go over London session. So Asia session made the run up. The New York session created this false high. And then we went into what? Consolidation. Consolidation is when the market doesn't pick a direction and just goes sideways. So see how highs aren't really been taken out. Hits this fair value gap and doesn't really go anywhere with it. Doesn't take out major lows. Like this would be the major pool. This would be the major pool. So once one of those gets hit, you're looking for expansion past that, or reversal. And what do you have? Expansion past that. And then it hits this gap, and that's where the reversal comes in. I also wanted to mention, this is not trade advice. I'm not telling you to take a trade. This is simply me reading price action and trying to teach price action. But I like to notice how it went past it a little bit, just to make you think, well, it's going higher. And then it comes back down. Failure to even get in this gap. Gets in this gap. Gets in this gap. Look at the reactions off the midpoint of this gap, or the reactions off any point of this gap. Reaction, sell off. Reaction, sell. Sell off. Reaction, sell off. Reaction, sell off. Can't even get to the midpoint, sells off. Can't even get to the midpoint, sells off dramatically. And then see how useful this breaker line is. So it makes one run above that. And I'm thinking it's going down, starting now. Because I wanted to see it hold in this gap. But it just colors outside the lines a little bit on the 1 minute and the 15 minute. Everything else, it stays in the gap and just leaves wicks. There's going to be some overlap. If you're looking at the daily inefficiencies related to like 1 minute price action, there's going to be like an overlap like this, where it just colors outside the lines a little bit and then holds up. Because that's going to throw you off if you're only looking at the 1 minute chart with this inefficiency. But if you're looking at the hourly, you see that's just a wick. And wicks can do the damage. I wouldn't be entering here. I'd be entering somewhere over here. Let's see. What do we got here? We got an order block. Let's mark this out. And the reason that I'm marking this out is because it's on this line of the breaker. And look at the reaction. That's just a weird candle, isn't it? It opens with a gap, closes with a gap. So this is just fake out territory. Like, this is to make you think, well, what's it doing now? Why is it doing that? But in reality, it's just manipulation. Trying to make people who sold here, who put their stop losses like in this gap or something, like people who sold in this candle, put their stop losses somewhere in here. The suspension block. This is a suspension block, so this follows the rules of suspension block. You put your stop loss above here or above here, and you're safe. But if you put your stop loss somewhere in here, you're not safe. And then what is this gap again? Oh yeah, that's the volume imbalance. Not sure what that is. So starting London session, 250 to 310, that's your macro. Let's look what the London opening range did. So 3 o'clock to 3:30, highest high to lowest low. You see it's just moving with this in mind. So that was created here. Uses it here, uses it here. Weird price action. Couldn't even get to this. Uses it here, uses it here, but that's for an entry. That's rejection off of this, but used for an entry. And then you take profit above this high or above this high. Because when you're at the bottom, you're thinking, well, just took out London liquidity, London opening range liquidity. So what's it going to do next? It's going to move in the opposite direction, or it's going to continue to expand. And it already used this as sell side. Use it again here. And then what does it do? Uses it as buy side. So this would have been a nice little scalp to here, to here, to here. Not to here, not yet at least. And then it leaves this range again, pull back, rejection off of these lines. You can see how clean this rejection is. Big candle in here. And what's the result of that? Big candles down. Big candles down. And that leaves it one more time. Goes up. Does it hit this breaker? It does not. But it hits this fair value gap. What time's your entry? Let's see back here. What time would be your entry? 4:04. So 350 to 410. Another macro. This could be your entry. You could do immediate rebalance. It doesn't quite get there. But you could enter off the bottom of this, because this is just a line in the sand where things reject and find support at the opening, or at the low and at the high of the opening range. It's where things find support. Like, look right here. Look at those candles. They just stay in between. Go through it once, leaves the high, and then massive rejection. And then we go through it. We tap this, which is uncharted territory. We tapped it once here. We found support, support, support. And then we find resistance. We find resistance once more. And then the result of that, this is where you're entering. I like this entry a lot. But it's not in your macro, so probably wouldn't be a good time to take a trade. So you're going to wait till 650 to 710. $649, 650. Taps that one more time. Oops. And then just look at what it does. Once you see it get in the bottom half, you don't really want to see it in the upper half. So that's one candle, or two candles that closed in the upper half. Then where's it find resistance? Not support and resistance, but like these levels hold. I don't know what you would call it besides support and resistance. It's just levels that indicate like price won't move in the other direction of those levels. It'll find a hard time to get past those levels. But it will get past those levels. But you'll see like lots of candles going like touches the level, goes the opposite direction. Touches the level, goes the opposite direction. And then you get a nice entry here, 7 to 10 a.m. That's your trading zone. So let's go 710 or 650. Enters this gap one more time, falls off. Now here, I'd be trading rejection block. Stop loss just above there. Might take you out there. But if you're waiting for a close below this, that's an open below it. You're waiting for a close, and then you're trading it. And also, market structure shift right there. It takes out these lows, switches characters, and then there, off that, you see a huge rejection. And where does it go? Asia session liquidity. And where does it go after that? More Asia session liquidity. Goes to the low of Asia session. 6 p.m. So these lows. And then now you're looking at yesterday. Where does it go compared to yesterday? Goes to New York lows. Goes to pre-market session lows. And then we have a huge turtle soup off of this low. So it's going to pick one of these. Or it might not. It might just run. But it's going to pick one of these lows if it's going to retrace. And that'll be the retracement. So that's why you want to be taking profit at session lows. Like, say you only thought it was going to go to here. You could take some profit here. Could take some profit here. Let's see, where are equal lows? That's really what I'm looking for. These are pretty equal. Relatively equal. You could take profit here. Oops. Then your final TP, this would be like the last thing you expected to hit is Asia session lows. Or this is an Asia session. This is afternoon session lows. And that's your move. So you enter off this breaker. You enter at the bottom. Let's call it 25,000. Take a partial here. It's 140 points. Well, that's like 100 points. You take your full TP. Say you're trading 2 contracts. Take your full TP here. That's 200 points. And that's 100 points. So that's a big move for you. And let's say you got real greedy. You took your profit at New York lows or pre-market session lows. Because honestly, I was thinking this is going to go way lower. It's going to go below these daily lows. And we'll have to see. Maybe afternoon session pulls through. Or tomorrow. Tomorrow I'm expecting a big limousine candle. Big candles. And little rejections. I'd say right at 9:30 or 9:30 manipulation, and then goes to it. let's just say you took profit at, well, nobody's gonna know exactly where to take profit, but say you took partials and New York low, and you held the rest, trailed your stop loss to this low, or you went for the daily low. Well, now it's the afternoon session, so there's not going to be big, huge moves. So right here, we're still below here. I'd say that's good enough for me. I'm taking my profit. I just made 400 points worth of money, and I'd be done there. There's no reason to catch anything besides this. It's all about liquidity. Let's go over what liquidity is. Let's go to the 1 hour. There's liquidity on the hour. Let's start daily. Daily liquidity. There's pools of liquidity below daily lows, below daily highs, or above daily highs. Here, there's buy stops because people are selling somewhere in here, and they put their buy stops right above this high. And that's why you see these candles, they'll take out these highs. And they'll probably put it not just above it, but a couple, maybe these are long-term position holders. They'll put it 50, 100, 150 points above this. And where does it go? Goes about 100 points above this high. And goes into what? This right here. This is the hidden gems. This is what people aren't appreciating or looking at, because they only want to know, well, where exactly is price going to go down? And it's hard to predict that when you first start. But you have to notice inefficiencies that normally your eyes wouldn't train right to. And sometimes it's going to go through your inefficiency, come back down, and then support it, which is why it's so hard. But you got to get used to that. But this is a major pool of liquidity. If people thought this was going up, they're going to put their stop losses below here. That's equal lows. This was the first liquidity pool. People are buying in this candle, and they're putting their stop loss below here. So when that gets taken out, people are also buying. People are buying and selling everywhere. But you got to think of, what is the majority of people doing right now? Where is the majority of people buying? Majority of people are maybe turtle souping this, but realistically, after this candle, they're buying in here. And they're expecting huge moves above here. They're buying. They're not buying when it sells. They're buying here. And they get taken out here. They get baited here, thinking, okay, this is the one. This is really where it's going to go. And during this candle, I predicted that we were going to have a massive sell-off, and that was going to be the high of the year. I have screenshots to prove it. And then it misses with them. It says, I'm not going that high. You're on the wrong side of the move, and it completely wipes them out. They're in here. They want to see a rejection off one of these levels and just let it ride to the moon. And that's what this wick does. It takes them out. So if we were going higher, we would have seen it right here. It would have taken out these highs and kept going. But it didn't. It left those highs intact. So rejection finds something, a little bit of support. If it went below the 50% of this, I would have loved to see it just run to the downside. But since we closed above the 50%, it's not going to do that, and it's going to find a little bit of support. That's just taking out sellers, late sellers, anywhere in here, anywhere in here. They're getting taken out. They're putting their stop loss above daily highs, getting taken out, selling here, getting taken out. So now everybody's taken out of the marketplace. All the sellers are taken out. So what does that mean? It means something's likely to happen because we keep failing. Wait, let me just check something real quick. This is a phantom trend line. It could be, but those wicks kind of pass through that. Phantom trend line is like a retail idea. So what they do is they take these trend lines and they let it hold for like a day or so, and then it'll come back, clear this middle liquidity pool, maybe tag into the 50% of the suspension block. Take out these highs, maybe take out these highs too, and then not take out these highs though, and then it will be the real move. But I'm not sure if it's valid if these wicks wake above it a little bit. I'm honestly not sure about that. What I'm looking for would either be a move into this 50% or a little higher, take out these highs, or just a run. Because if we were really bullish, I know this is a big reaction, and people probably were like, all right, we're going up now. But my bias was still bearish, so I saw that, and I saw it didn't take out these highs. If it took out these highs, maybe we're bullish. Or it's a liquidity sweep. You'd have to see what happens right after it takes out those highs. If it takes out those highs and immediately rejects, then you're still bearish. If it takes out those highs and keeps going a lot higher, maybe takes out these highs, then you're bullish. I kind of want to see this trend line get disrupted and then take out this liquidity pool. Because if that really happens and it does take out this, there's going to be a massive rejection because of it. Because this is a daily trend line. The higher time frame your trend line, like people will use these as resistance. Like they'll say, well, it didn't go above it here, it didn't go above it here. That's a good place to sell. And they're putting their stop loss above the middle here. So it's pretty likely that we have a liquidity sweep come up here, just a quick turtle soup, and then a fast run down to these lows and then to these lows. I'm thinking next 2 or 3 weeks that'll happen. All right, that is all for today. I think I'm going to wrap it up. Thanks for watching. Have a good one. Good luck.